Hey everyone, it's Paul with Investment Tuesday, and this Investment Tuesday, we are going to talk about the big event that is upcoming this week. What is the big event? The Federal Reserve, after years of anticipation for this enormous event, is finally going to do it. They are going to cut interest rates. And by betting markets, forecasts, estimates, they're going to cut interest rates by a minimum of 0.25%, maybe 0.5%. And then they're in all likelihood going to keep cutting. And in this Investment Tuesday, I'm going to tell you that there are going to be some surprising and mostly unanticipated effects of what the Federal Reserve is going to do. And that is because many markets have been anticipating this interest rate cut for 2 years, right? This is all that they have been focused on. And so, you know that we focus on investor behavior, market psychology. That would tell you, like, hey, if somebody knows something for 2 years, I mean, it's not some secret, right? It's likely, like, most people understand it, they bet on it. So what's going to happen then is going to be something different than what everyone thinks. And this Investment Tuesday, we are going to talk about that, the thing that we think that is actually going to unfold, which the vast majority of people don't think, not expecting, which means what? Big money returns. Big money returns. All right. Before we do all that, let's go through all of the usual things, which is the disclaimers and disclosures, which is that this video and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion. My view, our take, meaning ATG Digital, on the world. You use it as information, engagement, entertainment, whatever you choose to do with it. It's your responsibility because it is your money. Next, all ATG Digital content may contain errors, oversights, or mistakes. Understand that investment operations, buying, selling stock, crypto, options have significant risks and can lead to the loss of your principal. Bottom line, you could lose money. Next, the owners, employees, contractors of ATG Digital, we own, trade, transact in the securities that are mentioned in this video and all content from ATG Digital. We do not take money from company managements or crypto creators, sponsors to recommend their stocks or crypto tokens. We publish an enormous amount of free content, research, whatever you want to put it. The Substack, which goes out every market day, Ballman Speculating, which goes out at least once a month, and then YouTube. I am on along with my colleagues, Dean and Dan, and we are on multiple times per week, most weeks. Social media, I am very active on X. We're reasonably active on Instagram and on Facebook. You may be unaware, but you can join this channel, and the benefits of joining this channel are that you get early exclusive access to this video. Most people would get it on Tuesday. It comes out around 11 or noon or so. However, if you're a member of this channel, you will get it on Monday. And sometimes we talk about smaller stocks, etc., and there can be a benefit from being the early bird with respect to this channel. Next up, you can also choose to subscribe to ATG Digital. We have many subscription layers or tiers that begin with the silver tier at $9.99. What do you get for a subscription? Well, you get trades through our model portfolio. You get updates on those trades, and you just get general commentary, strategy, etc., of what is going on in the markets on a day-to-day basis. So check out atgdigital.media, and let me just put that up, and let me say that in the world of AI, you do really have to be very careful that you are going to this specific website. Don't go by the picture, don't go by the look. You got to go by the actual domain name, the website, because everything can be copied like this with AI. All right, I've got a lot of notes here. Just got to make sure 1, 2, 3, 4, 5, 6. I'm going to try and move through this as fast as I can. The main event. The main event is coming September 16th and 17th. Today, I'm recording this on Sunday, so that will be Tuesday and Wednesday, which is the Federal Reserve meets. And at this meeting, it is all but confirmed that what is going to happen is the Federal Reserve is going to cut interest rates by 0.25%, maybe by 0.5%, but that would be a surprise. And what is likely to happen? Now, if you go by, I'll say, the sort of standard analysis that's on social media and to some extent on legacy media, but truthfully, I'm less and less aware of what legacy media is saying. The thing would be like all markets will surge higher, mortgage rates will crash, stock prices will soar. I'm going to actually take a different view and actually show something that, what I actually expect, which is that the most likely thing that is going to happen that we can say is that some amount of money is going to start to come out of the thing that is most affected, which is what? Well, money market funds, CDs, things that are rate sensitive, right? And that's the number one thing that I will say. And it's not going to be a small amount of money because, all right, let me just show this. My plan was to show it in a couple of note periods. But these are charts actually from Wolf Street. This is a free website that I recommend everybody reads. He's also got a pretty contrarian point of view, and I often use charts that he comes up with to further my analysis. So small CDs, right? I mean, this is like a part of the market that nobody talks about, but there are people that don't invest in the stock market, don't invest in the bond market, all represents too much risk. I mean, but they are quite sensitive to interest rates. And you can see here, I will make this chart, I'll center this chart a little bit and make it a bit bigger. You will see here that starting 2008 with the global financial crisis, interest rates start getting cut, and essentially, other than like a little bit of a jump between 2017 and 2019, they keep going down until about late 2022. And these folks are very sensitive to rates, right? I mean, when rates go up, they put money into CDs. When rates go down, they take money out of CDs. So money is going to come out of this, right? There are other markets as well. However, they're not quite as sensitive. Like large CDs, not quite as sensitive. But nonetheless, if my impression is correct, which is that this is the beginning of not just one rate cut, we're going to have a series of rate cuts. Yeah, I mean, you've got $2.4 trillion here. And what do we have in the small CDs? We've got, another, this small CD market is not small. It's $1.2 trillion. So we got like, $3.6 trillion that are rate sensitive. And where are they going to go, right? I mean, some people may say, well, they got no place to go. Well, my belief is that, especially these small CD folks, they're some of the folks that are buying gold and silver. I mean, they're coming out of, fiat money, if you will, and they're buying stores of value like gold and silver. But where will somebody that maybe has a little bit more appetite for speculation go? Because normally when the Fed cuts rates, as a market like pro that's been around for 30 plus years, you're like, stocks are going to go up. Why? Well, because they represent risk, speculative assets. People chase that, it's like, oh, I'm not getting anything in my money market account, or I'm getting less. Let me go buy something. However, the thing is that because this rate cut has been so anticipated, so looked forward to, many, if not most, of the risk speculative and yield markets, and I'll lay out what these are in a moment, have been anticipating this rate cut for so long that they are all fully bid up and had fully discounted not this interest rate, but many that come after, which is why that, you've got the stock market at all-time highs, real estate, prices are at near around all-time highs, junk bond prices are at all-time highs, and at, among the lowest spreads relative to investment grade bonds. So these assets have, in my judgment, fully discounted this rate cut and a whole bunch more. So I mentioned, a bunch of what these assets. Now in the stock market, the money has flown not to all stock markets. Small cap stocks have done poorly for the better part of 2 or 3 years. They really haven't benefited from remember, people have been thinking about this rate cut from the time the Federal Reserve started talking about, we're going to cut rates, which was about a little under 2 years ago. Small cap stocks have pretty much done nothing. I mean, it's all been growth, tech, and the AI, mania that is unfolded. So those stocks have all fully incorporated this. Speculative stocks. I mean, I got a really nice note from someone that's watched my Open Door video on YouTube, which we gave up on well before any of this happened. So I'm not trying to take credit, because people will come in the YouTube video. It's like, Paul, you got us out and all this. Nonetheless, the video spread the idea that, hey, they have a lot of cash, and with the real estate market frozen at that time, I'm like, maybe it turns out. Now, that's not the analysis that turned out. It just turned into a meme stock, right? The folks on Reddit got it, and they started to, do a GameStop type thing. That's why the thing has just completely mooned. I think, the subscriber, he made 1,000%. He said it's the fastest 1,000% made. But my point to that is that these kind of speculative stocks, I mean, these have all anticipated the rate cut and are not places where, in my judgment, money is going to flow to. Junk bonds, I mentioned, sitting at all-time highs. You can look at ETFs, corporate bonds as well, never really responded to all of the rate increases. People just expected that, well, these are all temporary, they're going to come down. So you're not really going to get much of a benefit. Real estate is near all-time highs. Meme coins have also anticipated the rate cut. So all the kind of really speculative sectors are already bid up. So when I look at the array of assets that you can let's say it's like, hey, the Fed's cutting, money's going to start to move like it always does, right? When interest rates do anything, right? Money starts to shift. I mean, an old mentor, drilled this into my head. He said, Paul, interest rates are to the financial system as gravity is to physics. You move it, there will be action. There will be action. And you know what? In my career, that's always been true. It's always been true. So with all of the mostly the speculative assets bid up, right? Already fully anticipating not just this rate cut, but many more to come. What do we got left? We have very few unbid up, undiscounted assets to bid up. And in my opinion, the number one unbid, undiscounted asset that I believe is going to be bid up is, we should have a drum roll and a ta-da, is, I'm going to make you wait for it, high quality crypto. High quality crypto. All right, I'm going to take this moment to say that if you would like our crypto cheat sheet, well, click above here and it will take you to a link that will give you access to our free crypto cheat sheet. But back to my point. All right. I believe that like the money that is going to flow out from all of these different places, including small CDs, including money markets, one of the primary places, I'll say even the primary place, is going to be high quality crypto. So, I mean, the qualitative reasons would be like, the standing of crypto has jumped a great deal. The market access has jumped a great deal, which is, we got ETFs for Bitcoin. We have ETFs for Ethereum. There are hundreds of ETFs that are awaiting approval, from everything from XRP to Solana to Chainlink to this, to that, to the other. But that's really not the critical issue, right? The critical thing is that, crypto has not been bid up. There is no excitement in crypto. There is no euphoria in crypto. There is no one that is like, I'm the king of the world because I own Bitcoin, because I own Ethereum. No one's feeling like that. No one's feeling like that. Crypto feels like it's kind of been left behind, right? I mean, between the time the Federal Reserve cut rates, growth stocks, tech stocks, meme stocks, junk bonds, real estate, meme coins have all surged and rocketed higher. But the high quality crypto, what Bitcoin, Ethereum, tokens like that. Yeah, okay, like Ethereum after 4 years finally has hit an all-time high for like a second and then saw immediate selling. Bitcoin, is what at like 115,000, which is, it's an all-time high, but nobody is that thrilled. Nobody's that excited. Everybody was expecting more, and they've kind of given up on this. All right. And I'll tell you why, like that is part of at least my understanding of how markets work, which is very much driven by investor behavior and market psychology. That makes sense. All right. The critical thing that changes is the Federal Reserve cut, and also money that is going to start searching for a home, first slowly and then in a much bigger way. So my three-part model for Bitcoin drives off three things. And increasingly, as the new supply of Bitcoin, becomes just a smaller and smaller part of the market, like 95% of all Bitcoin is already issued. So the halving increasingly makes very little difference, right? And this is an understanding that truthfully has come to me in the last 1 year, which is like, if there's only 5% new issuance left, what difference does the supply make? It doesn't really make much difference, right? So increasingly, the halving, it's there and on the sort of on the edge, if you will, on the margin. It increases the potential scarcity, but Bitcoin is driven much more now by demand, right? Demand, which is dependent on fund flows. And then it's also driven by what does it actually cost to actually produce a Bitcoin, right? And I've shown charts before, and if you go and look, it's somewhere in the region of $95,000. It obviously varies by miner, and also varies by what cost people count. But bottom line, the critical factor that's been missing for a crypto bull market, and I don't count what we've had so far as a crypto bull market. We've had essentially, two little like mini bull markets in Bitcoin, one driven by the issuance of the Bitcoin ETF, and one, when President Trump was elected. But this is a very reactive chart. And, one of the things that is different about markets today than, even a few years ago, say 2019, is the number of individual retail investors like you, like me, that are in markets that whose behavior is not really that known, not that understood. like I could not have really imagined that we would have a round two of meme stock speculation. Yeah, that was not on my bingo card in any way, shape, or form. So we don't really know, and I sort of like put, the small CD players, yes, they're very conservative. Yes, but they chase yield, right? They're sensitive to these movements. So I think I'm not saying necessarily all these folks, but some number of them, because of inflation in this cycle, will come to chase Bitcoin and potentially others. I mean, and other higher quality crypto. Why do I say higher quality crypto? Because that's where the access is easiest, right? I mean, I don't think the vast majority of people are going to go and, and search out the most, I don't know, arcane, exotic crypto. But they have access to Bitcoin. They don't even need a crypto account anymore. You just do it in your brokerage account, right? You don't need a crypto account for Ethereum and XRP and Solana and others are coming. So this is why I say that some of these folks will go and be like, look, yeah, maybe I'll just put a little bit of money here. And, we're talking about 1.3 trillion and a few, 100 billion going into some of the smaller coins. Of course, institutions, we've got bigger money that is sitting underneath here, right? Large CDs. And I didn't really even show some of the other charts here, which is this is the total amount of money sitting in money markets from households, which is $4.6 trillion. That was another chart. This is the total amount of money market funds, $7.5 trillion. Yeah, there is a lot of money that doesn't own crypto that, under the conditions where inflation relative to, let's call the past, which is, the standard, the threshold, the hurdle was 2%. When people said, okay, you can't cut rates, that obviously is gone by the wayside because we're going to cut rates and inflation is about 2%. And there is also a very strong feeling just by people's sense, gut, instinct, that inflation is not under control. And, that judgment is made by everything from, how much we're paying for food, how much we're paying for insurance, all of these things. No one thinks that, the inflation genie was put back in the bottle as a result of the Federal Reserve increasing interest rates from early 2023 all the way into 2024. No one thinks this. So there is money that is open to the idea that maybe cash is not the place. And if I'm going to start getting less in terms of returns, maybe I should go somewhere. Now, I think some of these folks are responsible for pushing gold prices higher. Gold is at an all-time high. Silver is approaching all-time high. And the remarkable thing about the gold and silver bull markets is that there is almost no hype. Not almost. There is no hype. There is no mania. There is no euphoria. No one asks me about gold. No one. I mean, I tell you, we have 19 gold stocks across ATG Digital portfolios. And they are, I'll say, the lowest rate of return, and these were only put in April or so, is 30 or 40%, something like that, right? But nobody asks about that. There is no excitement. There is no emotional investment into gold and silver, and that is great news. That's great news, because the moment you start to get a lot of emotion, that generally shows very short-term thinking. Also, you'll start to see margin and people, trying to get rich quick. And that is usually, the beginning of the end of bull markets. So this is another signal to me that a crypto bull market, similar in some ways to the the kind of gold market is unfolding. In other words, where people are buying it based on some level of thought analysis, which is like, hey, I don't think these rate cuts are good for the preservation of my wealth, and I need to, kind of go somewhere else where the value can be, preserved better, right? And one of the signals that I have shown in a previous video is this Bitcoin to gold chart, and showing how, if you look at the bottom part of that chart right here, right over here where I've got the blue arrow, right? And it says gold and Bitcoin are synced since Liberation Day. Why? Because in my judgment, some of the same people buying gold for inflation are also buying a Bitcoin. In other words, some number of gold bugs, precious metal folks that are generally quite conservative, always concerned about the preservation of their wealth. For them, the price of gold is always kind of like, what they're focused on. But you can see that the correlation between gold and Bitcoin, I mean, these are now essentially moving one for one. So an all-time high in gold means that an all-time high for Bitcoin is imminent. And we've got a trigger event with the Fed cuts where I think it's going to trigger the first big bull market since the last one. The last one ended in 2021. No, was it? Yeah, 2021. Yeah, I can tell. It should be able to chart. Yep, 2021. Sort of like, as inflation speaking, and as people start to get concerned that the Federal Reserve is going to increase rates, and then we see Bitcoin crash. You can also see that gold kind of has a mini crash as well. Because generally speaking, if the Federal Reserve is willing to cut rates, are willing to raise rate to like squish and destroy and utterly wreck inflation, well, that's not good for gold. That's not good for liquidity. But the Federal Reserve raised rates, and not by a small amount. They raised them by like 5% plus. Still didn't squish inflation. And the moment you can see, here, the moment that this is in about like late 2024 or so, the moment the Federal Reserve did its rate cut, gold started to go off to the races. Bitcoin started to go up. And that tells you that, the underlying reasoning and rationale is now not just purely like this, like, hey, let me buy, Bitcoin and it's going to get me a Lambo. This isn't like not that market anymore. Instead, I believe we're going to see a big crypto bull market, but its character and personality will be quite different because the nature of the crypto market is different. We've got institutional players that dominate Bitcoin and increasingly dominate Ethereum. They are focused very much on, hey, does this token have actual purpose? Does it have some utility? Can it pay for itself? Remember, these tokens are computer platforms, and if they can't pay for themselves, they have to issue that currency. In other words, they're diluting you all the time. So these are their concerns. And the Federal Reserve cutting rates means that you're going to have new investors and potentially a lot of these retail individual investors, hey, us, be like, maybe it's time to, get into crypto. And that would mean the first real bull market that we're having. I mean, we have the mini bull market driven by the Bitcoin ETF, another mini bull market driven by, President Trump's election. But, both those bull markets saw massive reversals. But a big bull market would look like, the gold bull market, where, it just keeps going and keeps going. And it carries, other things with it, like gold going up has carried gold mining stocks up with it in a really big way. So make my point over this chart, which is that based on investor behavior and market psychology, I'm going to say that the reaction to this video is going to be this, which is like, Paul, you've been saying this for a long time. We already had, the bull market. Everyone says it's all over. And that is pretty typical, right? Because most crypto investors are going to end up, I predict their behavior, are going to end up fading the next rally, or they're going to sell most of it into it. Why? Because, yeah, I mean, I'll be, say that I'm totally guilty, because crypto is a really new market. There's no real easy way to kind of like know what's going on. The market keeps shifting, the analysis keeps shifting. But I always say the true fundamentals are investor behavior and market psychology, or if you want to, get it down even simpler, fear and greed. And I'll say, into a rally, there will be like, this is over. The fear is what's there, because there is no hype. There is no mania. There is no euphoria for crypto at this moment. And that's because high expectations fatigue. We're all expecting big numbers much earlier. We were all ready to buy, I don't know, an entire fleet of Lambos, and it just didn't happen. And so I think most people are going to end up selling as Bitcoin hits some threshold. I'll say, 125,000 is coming, and then, that'll see some little bit of selling, but then the markers are going to come faster. Right. And into that, most people will be skeptical. Many people will want to go short. They will get themselves destroyed. But my view is that a major crypto rally is about to unfold. And one other signal I want to point out is that on Friday, Gemini Space Station, I actually thought that this was like a one of those space stations going to space. No, this is actually a crypto exchange run by the Winklevoss brothers. If you remember the Winklevoss brothers, their fame comes from, their interaction, altercation with Mark Zuckerberg from Facebook. Watch The Social Network, the movie, and you will see there are the two Winklevoss twins. Well, they got into Bitcoin very early, to their great credit. I think they took a lot of the money that they got from the lawsuit from that Facebook situation and put it into Bitcoin. So they're billionaires from there. They have a crypto exchange, and it came public. And this is another signal. They were able to price Gemini at 23 times sales. I mean, so in other words, there are institutional investors, because IPOs are very much an institutional market, who are willing to pay 23 times sales for a company, right, in crypto, right, which is kind of similar but smaller to Coinbase at this point in time. So that to me is like, and we're not in a mania point. We're not in a, a euphoria point. That's another price signal to me that a big bull market is setting up to unfold, right? Setting up to unfold. And finally, this is why on Monday, if you're a member, you will have gotten these trades already. We added 11 crypto tokens, and we have never done this. Never done this in HEG history. We've never added this many crypto all at once. 2 to the silver tier, 4 in gold tier, and 5 in the diamond tier. Yeah, we're like, hey, remember, I mean, the Federal Reserve is going to cut on the 16th and 17th. We're going to wait, until next month to do this. We want to get that surge that goes higher. So we had, we had 3 or 4 crypto in each of these model portfolio tiers, but I'm like, we want more. We want more. We really want to participate, because my impression, like I said, is that this is going to be like gold. Gold, once it started to go up, you knew it was a real bull market when the gold mining stocks started to perform, right? So I believe that's what's going to happen. Again, the crypto cheat sheet. If you want to get our crypto cheat sheet, click here and you'll have that. If you're a subscriber, check for those trades, which will be in your email inbox. You've signed up for a text. And that's it. That's Investment Tuesday. I hope you enjoyed it. This is Paul saying thank you and goodbye.